Hello, Central Kentucky and beyond, and welcome back to another episode of My Kentucky Home. I'm your host, Clay Neff, and today we are going to introduce you to another professional, which is what we like to do, is introduce you to professionals that we have the luxury of working with day in and day out. Everything regarding a home, whether it be repairing a home or remodeling or buying or selling, the finance portion of a home, insurance. What we want to do is introduce you to people who can help you work on your house so that your house is working for you and you don't have to spend time working on it yourself and you can enjoy the better things in life. So today I have with me Becky Baldwin from Republic State Mortgage here in Versailles, Kentucky. Hi, Becky.
Hi.
Thanks for being part of the show today.
Thanks for having me. I appreciate it.
Not a problem. So I know we've had the opportunity to work together on a couple of different situations, but I just know you as Becky the Mortgage Lady. So, you know, when I was young, I was supposed to be this phenomenal high school baseball player. So I thought I was going to be a baseball player for the rest of my life. Unfortunately, that didn't work out. It came close, but it didn't work out. And now I'm in the mold business, which I never intended to be. So how did you get to be in the mortgage business?
Well, I also did not anticipate this being my career goal. When I went to, I guess it wasn't really until college. I went to Georgetown College and discovered a love of art. So I ended up being an art major, political science minor. After college, I really wanted to pursue the art thing some more, so I went on to jewelry design school. And I went to Kentucky School of Craft in Hindman, Kentucky. So many people may not know where Hindman is.
I do not.
That is Eastern Kentucky.
Okay.
And so I went to school there for 2 years for that, and I absolutely loved it. Had big dreams of pursuing that, but then I kind of started to realize once I got home from that those are jobs that are if you're going to be successful, you have to move to bigger cities, and that is just not for me. So I ended up working as a teller at United Bank. And then from there, I became a secondary market loan processor for Farmers Bank over in Frankfort. And then I came back to Versailles as a loan officer at Citizens Commerce. And then I was there for several years, moved on, and now I'm at Republic. So I think I've probably been doing mortgages now for 10 or 11 years, I think.
Oh, wow. Okay.
So definitely not what I was expecting, but it's kind of a more stable income than an art job, unfortunately, even though that would be my first love.
Okay. So I've been watching at night this show on Netflix, the glass blowing show. It's like this competition. It's amazing to me. Did you ever get to learn to do any of that?
No, I didn't get into any of that. Now, they had some classes for that at this school, but I was focused strictly on metals, basically.
Okay.
And so when I was at Georgetown, I actually did a lot of welding, and so that's kind of where it started. I really liked working with metal. I did welding, and sculpture was my emphasis. And so then it kind of translated to just a smaller version of sculpture for jewelry.
Good deal. Well, I need to have you over whenever I need something welded then, because I don't know how to do that.
It's been a while, but I might still be able to do it.
Okay. Well, I've been fascinated by this show because the way they do the stuff with the glass. So I started like Googling, and I was like, where can I go take? I want to take a class. I want to learn to do this. So we'll see if that ever happens.
Yeah.
But, all right. So now we had a realtor on not too long ago, and they were talking about the craziness of the market. And things, I mean, literally a house can go on the market hours later, there's offers on it. And we keep hearing realtors talk about, you got to be prepared. You got to have your ducks in a row before you even shop. And mortgage is a big part of that. So, I mean, what are, you hear a lot about they got to have a pre-approval letter or the sellers aren't going to take you serious. So what is a pre-approval letter, and how do you get one, and why is it important?
So it's very important because, like you mentioned, most of the time a realtor is not even going to allow you to submit an offer without one. And so what we would do, I'd take an application, whether it be over the phone, in person. Borrowers can do them online. Generally, either in person or on the phone is best so that I get all the necessary information. From there, that allows me to get credit pulled, which is a huge part of being pre-approved. We've got to make sure that the scores are where they need to be. It allows me to see what debts the borrower has. And so from there, once we get through the pre-approval application, now a lot of people also think that they have to have all the W-2s, tax returns, pay stubs, and everything for pre-approval, but that's not really the case. What I do is I pre-approve them based on what they know their income to be. Obviously, we hope that they've got a pretty accurate idea of that so that we don't run into issues later. But you don't have to have all of that just to get pre-approved. We do it just based off of your, what your employment, income, things like that to be. And as long as all the numbers work out, then and I can get you pre-approved, I would then give either the borrower or the realtor a letter that doesn't necessarily list the loan amount. It mainly just revolves around their loan to value, how much money they plan to put down. The loan type is important. And then that's kind of just the main jumping off point is getting that pre-approval done.
Okay. Well, so the credit portion of it. Like I know, when I was in college, I did not manage my money well, had some credit issues, that
Yes.
corrected over the years, but it took a while. How important is the credit in this process, and are there things that you can do to kind of get that moving in the right direction?
Yeah, it's crucial. And there's a kind of a common misconception that I see, particularly in, I guess, younger first-time home buyers whose grandparents and parents have, scared them away from credit because it used to be you didn't want to have a lot of credit, that was bad. But now it's essential. You can't get any type of loan. I mean, I can't say that I don't do them all, but for sure you can't get a home loan with no credit. You have to have some sort of history in order to generate those credit scores. And so it's really, really important to know that starting out, that if you have nothing in your name, no car loan, no student loan, no credit card, it's going to make it really difficult. It's just going to slow you down because then you have to go ahead and start establishing those lines of credit. Generally, it's good to kind of have 3 lines of credit, whether it be a revolving credit card account and an installment loan. I have a lot of borrowers who will go out and purchase a couch or a bedroom suite and finance that and make their payments, and that really helps to start building credit. But it's really important to have those trade lines so that there's time for that history to generate and produce scores. And then obviously the score comes into effect. That's changed a little bit with COVID. Some of the minimum credit scores are higher than they were before COVID. So you've really got to pay attention to where your scores are. And there's many times where they're close. And maybe we just have to kind of look at that credit report and see what can be done to raise those scores the quickest to get them where they need to be pre-approved.
So credit's obviously important. You mentioned like debt to income ratio, and that kind of determines like really what houses you can shop for, doesn't it?
That's
So
right.
I mean, I would love to buy $1 million house,
Sure.
but I may not be able to. So
Yes.
is there a formula for that? Or?
Yeah, it's basically the money that you have to pay out each month. Like I said, student loans, credit cards, car loans. Those are the type of things that report on credit. Now, your phone bill, your insurance, those things don't report. So you would divide those debts by what you bring in, your income each month, and that will give you your debt ratio. And typically, we try to stay around that 40-45% mark if we can. You can go a little bit higher, but I always like to try to play it safe as I can and not end up with a surprise down the road if things come back higher than we're expecting.
Okay. So really they need to think about it in the terms of the lenders taking risk, and they're wanting to minimize their risk, especially since the housing crisis several years ago.
Yeah.
But so now What about somebody who gets a gift? Like I know, a lot of people get a gift from family, their parents or something like that to buy a house. Does that play into the equation, or is that more at
Yeah.
closing, or how does that work?
So that's important to have that information kind of up front.
Okay.
It's better if it comes from a family member, obviously a parent or grandparent, a very close family member. It gets a little bit more difficult as those relationships become, a close family friend or, something like that can be a little bit more difficult to get approved. But basically, whoever the donor is will likely just have to provide a copy of the check that they give to the borrower. Sometimes we have to have a copy of the donor's bank statement showing those funds coming out of their account and into the borrower's account. So that's something that not a lot of people realize and can really cause an issue with privacy. People don't really want their information out there, but it's something that has to happen. And then those gift funds can be used towards down payment or closing cost. And we just kind of figure it that way from the beginning. And as long as there's no changes, then it's usually pretty simple. And people do it a lot.
Okay. Well, now I know home loans are a little bit different than car loans in that, like, you pay a lot of interest up front, right? I think, I never say this right, but amortization.
Uh-huh.
So how does that work? And I know because when you look at, when we buy our house and you look at the truth in lending statement, all of a sudden you see this number that's like huge compared to the house you're buying.
Yeah.
How does that kind of factor in, and how does that table work?
Well, your amortization schedule is just going to show you, and generally you get one at your closing that shows you every single payment that you will make. If it's a 30-year loan or 20-year loan, whatever the case may be, it'll show you every single payment, what portion goes to principal, what portion goes to interest. And then so that you can kind of have an idea as you go where you are as far as like your loan to value. And the loan to value is the loan amount that you take out divided by the value of the home, the appraisal value. And a lot of times if there's private mortgage insurance or PMI involved, then it's important to know where you are on that amortization schedule to see when you may reach that 80% mark where you can then cancel the PMI and get rid of that completely. So amortization plays a big part in that.
And what is that PMI for?
PMI happens anytime that you put down less than 20% on a loan. And so we see that a lot because we have loan programs that allow for small down payments. And so anytime that you put down anything, even if it's 18 or 19%, you will still have PMI. And the PMI is it's part of your monthly payment, just like your homeowner's insurance and your property taxes. It all gets rolled in together. But like I said, once you have paid down to where you're at 80% loan to value, however many years that may take, then at that point you would be able to cancel that part and it would go away and come out of your monthly payment and lower it.
Gotcha.
That's always a big question for home buyers, is how that PMI works and when can I get rid of it and how do I get rid of it.
Okay. And the whole purpose of that really is to protect the lender, right?
It protects the lender only, yeah. It is not anything that protects the buyer.
Okay.
That's right.
Well, let me switch gears a little bit and talk about, because I know in our line of work we deal with a lot of people who may be fixing up their house or remodeling or whatever, and I see supplies are in short demand right now because everybody seems to be doing it.
Yeah.
So a lot of people are refinancing and a lot of people are doing home equity lines. What's the difference in those two?
Well, the home equity line, that's going to be, and we don't offer those, so I can't speak a whole lot about a home equity loan except that it's more of like a revolving line of credit. What I see a lot of are cash out refinances. So basically we refinance whatever the current principal balance is on the loan, and then depending on the appraisal value, however much equity you have available, we could then look at maybe taking out an additional $20,000, $30,000, whatever you think you may need for your projects, and we add that to your loan amount and finance it all together. And so then at the closing, you have a 3-day rescission period on any refinance. So 3 days after closing, then the borrower can receive those funds to put towards whatever they need, whether it be home repair or debt consolidation. We see a lot of that too.
Okay. Well, what would be some pitfalls of doing that? I've heard some stories of people who do some debt consolidation, but they don't change their behavior, so to speak. And then,
they always come back.
Yeah. Well, I guess the job security, right?
Exactly.
Yeah. So I'm sure my wife would like to use it for a swimming pool. That's probably her main thing.
We see that a lot. Yeah, those are especially, I've noticed that a lot last year with the COVID coming on and people staying home and interested in putting a pool in. I heard a lot of that.
So what's the strangest thing anybody's wanted to take money out for?
I don't know. I don't really see a lot of anything strange, really.
Nobody's bought like a pet elephant or anything?
No,
like that?
not that I know of. Now, a lot of times they are hesitant maybe to disclose exactly what they're using those funds for, in case I might find a reason that it wouldn't be doable.
Gotcha.
So maybe they keep the weird stuff to themselves.
I know I would, so. Well, awesome. Well, so, obviously, like I said, the market's crazy right now. So if you were to give our listeners and viewers, like, what's the 3 most important things they need to do in this housing market from a mortgage standpoint?
Well, the first thing is to know where you are with credit, because that's going to be key. You got to know if you have credit, and if so, that you're up to date on everything, paying on time, so that you've got solid credit scores. And then after that, the pre-approval is the next most important item. And then after that, it's unfortunately, with the way things move so quickly, you pretty much you have to, if you're going to make an offer, you have to make it immediately, which is really scary. I went through the same thing. We've been shopping for a house for a couple of years and went through many offers where we had to make a snap decision, and that's hard to do on such a big purchase. But it's just important to know going into it that it's something that you've got to be really sure that it's what you want to do and that you're ready to do it. Because once you get in there and you put your offer in, it's
done deal.
Yeah.
You're there.
So, just really be sure that you're ready for the responsibility, especially for the first-time home buyers, to really know what you're getting into.
Okay. And what you can afford.
Exactly.
So.
And be comfortable with where you are on your payments.
Right.
Because you're going to have them for a while, most likely.
Right. You want to own your house. You don't want your house to own you. Right? You hear that a lot. So,
Yep.
Awesome. Well, this has been super informative. So how do our audience get a hold of you if they want to utilize your help in their mortgage process?
Well, you can get a hold of me at Republic State Mortgage. Our office phone number is 859-879-0044. My email address is bbaldwin@rsmc.net. That's going to definitely be the best way. Email is really easy because I can respond to that day or night.
Okay, perfect. Awesome. Well, thanks again for being on. It's been a pleasure speaking with you. And everybody, give Becky a call when you're ready to do your mortgage.